Hi, everybody. Welcome back. Hopefully, you got your look into the future business, not business, but monthly budget project done. And we're going to move into income and taxes now. And we're going to have a mixture of different things in chapter five. It's going to be quick, and you're going to have a quick quiz right at the end of this. Today, after you're done watching this, you're expected to do your module, income and employment. So make sure that you did that. It's a short one. It's one of the shortest ones, only about 25 minutes long. Take the exam and take a screenshot of what you scored at the end and submit that. Getting the income and tax, one of my favorite lines that one of our founding fathers, Benjamin Franklin, said is only two things in life are certain: one, death, and taxes. You're going to have to pay tax. So let's talk a little bit about taxes and how the government relies on these things. We talked a little bit about taxes in the House of Ways and Means Committee in the House, and we talked about how all spending, any money that comes from the federal budget starts in the House, okay, and all spending is derived in the House Ways and Means Committee. The government relies on revenue taxes to meet their expenses and pay for services such as roads, education, and social services. The government taxes three bases to pay for its programs: income, consumption, and wealth. So these three things what the government taxes. Anybody who earns an income pays taxes. And on April 15th, that's the day that you will file your taxes. Some of you have probably already done this if you have a job where taxes comes out in the United States. At least that's the deadline, okay, that you have till April 15th. Now, you can get it done before that if you'd like, which majority of people do. If you have overpaid throughout the year, you will receive a tax refund check. If you have underpaid, you will owe an additional payment towards the federal government, okay? And kind of the goal that everybody's kind of out to get is to try to owe nothing, okay? Try to figure out how much tax will come out and give you the max from month to month. Some people like to have a tax refund check, others do not. Would rather take the max, pay it later if they have the income on hand. So some taxes on income are often subject to deductions or credits based on individual financial circumstances. On your pay stub, you will notice three deductions taken out of your paycheck. Number one, these are called the withholding taxes. And if you were to come in to have me in class, today would be the day where we would figure out how to basically take your money from your projects. I know you guys just straight up calculated it on the website, but I actually would have you fill out a W-4, figure out how many withholdings you would have, put it into the tax brackets, give you the formula, and we would figure out as a class together how much federal income tax would actually come out and why it would come out and how much you would benefit if you were married, and so on and so forth. And if you had included more exemptions, the more exemptions that you have, which means, for example, if I was living by myself, I would only claim myself. That would be one exemption. That means they would take the max out of my paycheck, okay? So I'd probably get a tax refund at the end of the year, okay? Now, if I would claim my wife and my two kids and myself, then I would have four exemptions. If I had four exemptions, they take that into consideration. You're paying for more people, so on and so forth. Therefore, they would take less tax out, okay? So if you guys can kind of understand that. The form will be sent to the government, and they will determine how much tax should be withheld from you throughout the year, okay? And mainly when you get a job, your business, we have a financial lady, Miss Berger, who at the Joe McLean High School. She works in the Ed Center, and she does this for us, okay? Payroll taxes are the big things that you're going to pay. It's called federal income tax. It's a large portion of your paycheck. I pay anywhere from, I think it's around $150 per paycheck every 2 weeks towards the federal government for your federal income tax. The more money you make, the more federal taxes you're going to pay, depending on which tax bracket you get bumped up into. So federal income tax, which is used to support governmental programs, and this is where the government gets much or if all of their money. So you work for it, they spend it. It's part of the kind of the deal that you have living in the United States of America. That's why it's so important to vote on the politicians that you want, because depending on who gets elected to the president or the House or the Senate will determine the tax brackets. President Trump, for instance, created a new tax bracket, okay, when he was elected to office. So it's very important that you look at these things and figure out to determine how much money is coming out of your pocket every month, okay? State income tax is another one that's going to come out of your paycheck. This is used to support state services. And then federal insurance contribution tax. This pays for benefits usually workers and families receive for either Social Security or Medicare. It's a flat rate of 12.4%. half of this tax is paid for the by the employee. The other half is paid by the employers. You're going to pay around 6% of that tax, which is a lot of your paycheck as well. Taxes on the wealth. The primary tax on wealth is property tax. You will have to pay property tax as well. You will have to pay. So the more acreage that you own, the more land you have, the more tax you're going to pay on that property. It's going to make your mortgage go up. A lot of people forget to include that. So when you guys were buying your houses, I never took into consideration how much property tax, or gave you guys how much property tax you would be buying. So I know there was one house that the one I pulled up was going for $289,900, and I couldn't afford it. If you watch my last video, that also came with 10 acres. I did not include that into my monthly payment. That's going to make my payment go up considering taxes. Most people get what we call taxes escrowed into their mortgage, okay, which means their property taxes are taken for the whole year. They're split up and they're put into their mortgage. You could choose not to do that, pay your property tax in a lump sum at the end of the year as well, which some people do that just to keep it off of their mortgage to make sure that they're paying it in full. Some states tax certain types of personal property as well, including cars, boats, and recreational vehicles. Other taxes include inheritance. If you inherit money, you will get taxed 15% of that inheritance. So be aware of that. Estate tax as well. So how much the value of your house, you'll get taxed on that. And any gift taxes as well. People give you money. Sales tax, tax on goods and services that goes to your state or local government as well. Each state has its own tax rate. And excess tax is levied on certain goods produced within the country and is sometimes referred to as luxury tax. We have taxes on things like gasoline, beer, liquor, cigarettes, airplane tickets. All these different things include taxes, okay? The IRS, the Internal Revenue Service, the federal government agency, is responsible for tax collection and tax law enforcement. It was created during the Civil War in 1862 to enact the national income tax to pay for war expenses. The IRS audits certain people. You will get audited in your life at a certain point in time, and they will look to make sure that you're doing your taxes correctly. If not, you could pay hefty fines if you try to lie on your income tax reports, or even so, be sent to jail if you're not paying your taxes, okay, or filing your taxes in a manner that's supposed to be filed. You have to be very careful and make sure that you do not lie on your income tax forms. Make sure that you're doing them very carefully. Make sure you get a professional to do them for if you don't know what you're doing. Okay. Here's the 2016 tax brackets, for instance. All right, and you can kind of see here. Single filer. So if I just filed myself, you get a 10% tax rate if you make anywhere from 0 to 9,275, and then you can see all the way up there, 39.6% if you make over 415,000. 500 if you're by yourself, and you get a massive tax break, okay, if you file jointly being married. That's one of the benefits, major benefits of being married, okay. If you guys claim together, I mean, you're talking about, look at how much that tax bracket you're getting. You're getting a huge thing. So if you both make $233,000, okay, and one person makes $232,000, you're under this threshold. You're going to the 35% bracket. That makes a big difference from jumping those percentages. Like for a big jump is the 15% to the 25%. I had a friend that he got promoted when I was working at Lowe's. So he got promoted from just working in the lumber department as an everyday worker to being the lumber manager. And when he got promoted, he actually got less out of his paycheck because he jumped a tax bracket. He jumped from the 10% rate to the 15% rate per year. Okay, and you can see it up here. And he actually had less money because he was right on that threshold of being, on there. So his paycheck, he goes, what the heck? I got a raise and I'm getting less money. Well, it's because he jumped tax brackets. So, these things happen quite often. I'm sorry, he jumped from the 15 to 25% for single filers, as you can see. So he's making under 37, and then he jumped to 25. That's a big jump. That's the biggest jump right there. So if you're making right around 37 to 50, those are basically the people that get hit the most. Now, this is obviously a different tax bracket than what we're under right now. I just gave you this one as an example. President Trump has a new tax bracket now. If you're interested, you can look up 2020 tax brackets, and it just shows you how much you're going to get taxed federal governmental wise. Okay, if you make between this amounts of money, and if you file together, if you're married or by yourself, or if you're the head of the household. So if I claim myself as the head of the household and I claim 2 kids, okay, I'm going to be over here. If my wife and I file together, we're going to be in here. If I file by myself, we're going to be over here. So depending on how you file and fill out your W-4s, okay, is a big reason on how you're going to be projected in the tax bracket. So it is very important when you fill out your W-4s to make sure that you're doing the correct exemptions and figuring out how to fill those out yourselves, okay? And it's very, very important that you do those because every decision you make when it comes to taxes can determine how much money's in your pocket monthly or bi-weekly, whenever you get paid. I want you guys to understand this. All right, so if you have any questions for me, please let me know. Message me through Schoology or we can set up a chat. Make sure you do your income and employment module. It's due at 11:59 p.m. tonight. Make sure you do that. Make sure you get it turned into me. All right, if you have any questions, once again, please let me know. Hope you learned a little bit about today. Tomorrow, we're going to be getting into to buy or rent a home and to buy a newer used car. So stay tuned and pay attention, okay? And be caught up here. All right, guys.